Can't see the wood for the trees? Don't stress. We're here to navigate together. So I have been away yesterday and there's a lot to discuss, and let's therefore dive straight in. I want to have a look at what has happened with the Dixie over here. As you can see, over the last 11 weeks, and it was sold to the top. Okay, our order block has been pretty ineffective. This order block over here, price has just literally powered straight through. So what I'm going to do is remove that, but let's just quickly have a look here. I also said that we needed to have a look to see if this was going to be a liquidity grab up at the top here. Usually what happens with liquidity grabs is there's a little spike up and then move down. As you can see, what has happened here is that price continued to tap around in this zone over here. Before, okay, we have had a nice little pullback, which is a breather and quite necessary if you've had these very, very powerful moves up. And essentially what I'm looking for here is the following. Are we going to break market structure? If we do indeed break below this SR level over here, which does seem to be like what it's doing at this point in time, are we going to continue with a bullish market structure, or are we going to break down out of this channel? So essentially what we need to be looking for here is the following. Is it going to break down below this SR over here? If so, will our midline hold? If not, is it going to hold in our order block and bottom of the channel and previous SR line to go further? Or are we just going to break straight down and back into our old range where this is simply a deviation? Time will tell. However, it does look pretty strong right now, to be very honest. Let us clean up this chart like I've said. This now, let us remove that. Let us remove our weekly order block so that it just gives you that picture over here. Right. So just bear in mind that this is pulling back to give SPX a potential little breather before potentially moving back up again. And if we now have a look at what's been happening at SPX, I did say quite some time back that this looked like a head and shoulder developing, and if we break below our neckline, which is in this zone here, it's actually a zone clearly defined area. If we break below this zone, then we could really see that this head and shoulders pattern is actually developing as a head and shoulders pattern does. Now, this is what we need a little bit concerned by. This latest price action over here, this is a very, very powerful move down. We've essentially broken down below this historical zone of support and resistance, which has been a very, very key and critical area. And essentially what's happening now is we've turned it into resistance. So will the Dixie that I've just shown you, pulling back a little, give this brief little rally chance for the SPX before it continues further down, confirming our head and shoulders pattern? That's what I really, really want to be having a look at over the next day or two as the week unfolds. So that's really, really concerning in terms of the price action of the SPX if you're a bull. I want you to know that this line over here is the macro value area high. This line at the bottom is the point of control. So normally, when you have price action on the top side of the value area high, as we see here, and returning back down, it is actually really just normal for a ranging type of environment. And what does that mean if we are indeed just ranging? Let me give a bigger picture of what's happening over here. This is the range that I was talking about, the fixed range essentially what that means is that you can expect this kind of range to continue, right? And right now, essentially what's happening is that we're just returning back in this range over here. First port of call is actually a support resistance zone, as you can see, around this area over here, which is at about 4,200. So let's have a look to see if price does break down further, confirm this as resistance, and see what happens around in this area. Then, if that fails, our next port of call will be the point of control area. Right. So right now, not looking too hot for the SPX. Dixie powering ahead, not taking any prisoners. Okie dokie. Now, what I want to do is just quickly, before we have a look at the liquidity, let's move on to our usual view of our spot and our perpetual CVD. Beautiful rise, as we know, change in sentiment in the spot. However, locally, what we can see is a bearish kind of structure. Right. Let's just now quickly have a look. Pretty flat sort of price, if I can call it price action in the CVD of the perpetual market. Still, however, looking pretty positive with overall rises. What I want to do is therefore now just have a more of a sort of magnified view of CVD. So this is pretty important for where we are at. So essentially in the previous screen, it appears to me that there's a 50-50 kind of chance. It's pretty difficult right now, this market, to read exactly what's going on. So that's what I'm going to do to try to navigate through. Right now, as far as I'm concerned, there's a 50-50 chance of a move to the upside or a big move to the downside. So as you can see from this point over here, we had a declining CVD. This is on the Bybit perpetuals up until this point here. We had a increase in our lows up until this point over here. Same area. Okay. So what does that mean? That is a bullish CVD divergence because your CVD is going down. However, your price action keeps on having higher lows. What does that mean? Essentially, it did mean that I was favoring a squeeze, a short squeeze to the upside. Okay. However, there has been quite a change in character from this point on, where you can see quite a dramatic increase in the longs, which essentially has changed our CVD to be, let's show you here, pretty flat from about this point. If you take the crosshairs all the way across, you'll see that we are pretty much back flat at the CVD that we were at this point. So essentially at this point, I do see that we do have kind of a 50-50 chance of either going up or down, as there's a change of character. What we also need to take note of, and this is very important, that there has been this very, very flat price action over here. All the while, we've had an increase here in our open interest. And what does that mean? As soon as open interest increases to a pretty high level comparatively over the last few days, as you can see, we have, let me move this up because I believe I'm in the way. Right. As you can see, locally, we are reaching highs of our open interest. And that does mean that market makers have waited long enough and have manipulated price long enough for them to have collected liquid, or to be able to collect liquidity that has been building up to trigger their next move. So I do expect that we will have yet another big move this week, as we are now starting to get to the close of the week, as in tomorrow and Friday. So let's try to prepare and have a look to see exactly what we can expect. So like I said, what I'm expecting is actually 50-50. I'm slightly favoring the downside at this point in time. And the reason for that is the change in character that we've seen. A slight rolling over in the spot and this flagging sort of ailing aggregated CVD over here. Right. Let us now look at the liquidity that has built up. We've got a very, very equal story once again on both sides of current price action. We've got a nice pool of liquidity here and a nice pool of liquidity over here, pretty much equally balanced in a tight range of only $1,000 over here. Okay, so just bear this in mind. We have essentially a little honeypot over here. Nice little honeypot over here for market makers, and I think they're going to sweep both sides as they usually do. We've got a huge honeypot here up at the top, comparatively speaking, of as you can see over here, 133 million in potential liquidations if we get up to the local top over here. So, therefore, what does this mean? Market makers are absolute dogs. They want as much as possible. So, it appears to me that current price action is much closer to this pool of liquidity over here. So it does make sense that there would be a spike up into this liquidity before grabbing this liquidity at the 27K zone and then moving back right up again and grabbing that liquidity over there. So I'm favoring a greater move to the downside with where price is right now, but a quick spike up, down, up again, right? That is essentially what I am favoring. Okay, this is our higher time frame chart. Nothing has changed much on the daily side, so I'm just going to focus on this to try to keep the time of this recording down. As you can see, past price action, I did expect to come up to the top of our current range. It did, however, fail to come right up to the top. And what was the reason for that? It hit into this order block over here. The reason why I didn't make you aware of this order block is because it is unusual for that price to be so and to come into. This is not the prettiest order block. If you drop down to the 2-hour time frame, that is why I didn't make you aware of it in these short video updates. But that is essentially what retarded price plus the top of this very well respected channel, as you can see. So what I'm going to do is just move us up here so that that doesn't get in our way. I want us to focus now nicely on exactly what's going on over here. Our historic SR levels have been absolutely fantastic. I mean, it's just literally picture perfect. The pinpoint accuracy of what has been going on with our SR lines have been fantastic. This is quite interesting what happened yesterday. I did expect a further breakdown at the bottom of this channel. However, price, as you know, as you've seen, has seen this sort of bullish CVD divergence, which is, I think, what held us up over here. Therefore, it did look good for our short squeeze up to higher levels, but that is also starting to sort of flag and fail. So, what I do want to therefore point out is the following. I'll quickly go back here and show you exactly these zones. As you can see, that's 27.8K. Let's just map that zone out. What is 27.8K? It is here, right? There is a selling imbalance at 27.7. What usually happens with price is when it hits a selling imbalance, selling imbalances usually retard the price or slow it down, and we therefore are going to potentially head up to our 28K, like I said earlier, before coming down and clearing out our liquidity at 27 odd K. Okay, so let's come back and have a look here. And where does this end? 26.8. So let's map that out once again. And what do we see? 26.8 at the bottom of this range over here. So essentially, as you can see, price once again is just very, very beautifully respecting technical analysis and liquidity pools. So what could we expect with price action? Little spike up, come back into our current little range that we're in, fail to hold this as support and come down here into this liquidity and clear out that liquidity pool, like I said. And hey, presto, we have got this beautiful channel and respect going on. Let's clear that off and just come back here and see what that is. That is Friday is the end of the week, and that is about 10 o'clock odd in the morning, Friday, which would complete another fairly large move like that and like that, essentially, before potentially another move back up to the upside, clearing out the larger pool of liquidity at the top here. Okay, so that's essentially what it could pan out to do over the course of this week and next week. What could tip us over? Let's have a look in 47 minutes from now, which is 14:15 GMT plus 2 time. We have some news coming out with some further news and further news then yet again tomorrow. Okay, so we do have a couple of news events we have throughout the week, in fact, today, tomorrow, and Friday, which haven't historically produced major volatility around the news release, but has tended to shape and push price in the areas that we are targeting. And that essentially comes through, as you know, on the major TradFi markets, which therefore trickle down into our markets that we are trading. Just having a look back here. Does seem to be one, which might give us that small little push up in BTC before a further decrease in price of the anti-correlated markets. Okay. What I did want to show you guys is what exactly have I been doing in these pretty boring flat ranges as we see. This is a 30-minute chart. And what I've been doing is I've just been scalping ranges. So that's essentially exactly what you need to continue to do. Having a look at the smaller time frame, knowing exactly what on a bigger time frame to expect. So essentially, remember what I said is that we could potentially come up to the top here if we see a little breakout before coming further down. So here, what I'm doing is I'm not preempting anything. Markets look pretty balanced. So essentially, don't try to get clever. Just play the smaller ranges until they break. You've seen some great entries from the top here for our shorts, some great entries from the bottom here for the shorts, and really well-respected channels in between. Our TD indicators really nailing things, telling us exactly what to do and how to do it. So essentially, just play it cool and continue to do what you do best, which is reading order flow, having fun with your TA, and essentially just keeping your losses small with relatively small risk over here compared to relatively decent kind of reward. It's a very simple system. So if you are interested in 10xing your account, then join us. We've got 6 warriors already that are going to get taken literally by the hand. And we are going to 10x our account from 0.1 BTC to 1 full BTC. What do you need to do to join? Essentially, go into the description of this YouTube video, and I will drop a link there to my Twitter. What you need to do is please subscribe, follow, like, comment on the Twitter post and let me know you're interested, and then I'll invite you. So, with that, have a great day. Chill out, enjoy, have fun, and I'll see you in the next one. Cheers.